to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
India has essentially carried out calibrated strikes, precision strikes on 9 terror camps.
We'll just have to give it time for this to sort of play out in that sense.
I don't think the US-China trade, while it may resume from a complete stop, it's certainly not going back.
So if you look at, Bangladesh's exports to UK, it's almost 4 billion.
We don't foresee so much of competition coming in.
Israel coming out very strongly in support of India.
It's about 0.4% down, 24,277 is where we're at.
Clearly, the global support is with India.
9 टेररिस्ट कैंप्स को टारगेट किया गया और पूरी तरह से इसे बर्बाद किया गया.
This is an exercise to prepare and sensitize civilians about what's happening nationally.
Of the Cabinet Committee of Security that met this meeting being chaired by Prime Minister Narendra Modi.
Punjab and Himachal Pradesh have no flight movements at all.
The initial, fall that we saw, but the mid-cap end of the markets, that's holding up well, right?
Well, that is the day so far, and on the index, there is still not very much to show for things. Really, a 10-point change on the Nifty, 24,400. We started around those levels, and we are there even now. Although mid-session, we've had a bit of a small rally, then a small sell-off, but nothing major at all. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Reema, and Nigel are with me. Guys, hi, good afternoon.
Hi, good afternoon. It's been a very mature reaction by the markets. There were some initial jitters, but after that, it's been fairly resilient, stable. So despite all the heightened tensions and the headlines, the markets have been calm.
Well, that's right. Part of the uncertainty is behind. The last 7 to 10 trading sessions, the markets have been waiting by for this attack. And now part of that is behind us. We have to see if there is some retaliation and then, in fact, if it breaks out or there is an escalation from here on. But otherwise, the reason that we're seeing particularly the broader market outperformance is because of this. We started off with only 185 stocks that were advancing, and now that number is at 1,400 stocks. The crisscross lines come up for you on the screen. That will give you a picture. And for the last few trading sessions, a lot of large HNIs, they've been sitting on the sidelines. In fact, they've been raising some cash levels as well. Now, gradually that money will get deployed. As it is, we know that the FIs have been backing up this market. Domestically as well, there is a fair bit of liquidity. And now the HNI community will gradually start deploying some money, which explains why the broader markets are seeing a relative outperformance.
Absolutely. There is no volume on the downside.
Yeah.
I'm just looking at the top traded NSE stocks. I think 8-10 stocks have got volume and then suddenly drops off. Nothing. Even though, it's not as if market breadth is some 5:1 or even 3:1. It's pretty close to being 1:1. But you look at stocks which are higher and it's a much longer list. So at least, and this is true. This was true yesterday as well. Even as the market was selling off and we ended down, this is a market which wants to go up. I think that's the way to look at things. But just waiting on its hands for more clarity. Is there clarity? Is there absolute clarity and certainty? Obviously not, because we'll need to wait and watch if there are any further. If there's any further escalation with regards to India-Pakistan. But otherwise, this is done and dusted now. I think the market will move on. So enough and more activity as far as the broader screen is concerned. We'll, of course, highlight some of the specific stocks which are moving around. Reema.
Indeed. So while the immediate reaction has been fairly stable, investors will continue to remain vigilant. And the focal point today of investors will be the Fed rate decision. And that will be out later in the night for the Indian market. So taking you through the big movers in the frontline pack, most of the FMCG names. So Asian Paints is the top loser. That's down nearly 3%. But ITC, Nestle, Tata Consumer on the back foot today. Asian Paints, remember, declares numbers with a whole host of FMCG majors. Sun Pharma is on the back foot too. On the way up, you've got Tata Motors and many of the companies which can potentially export to the UK rising. So there is clearly a lot of optimism going into the UK FTA. Look at the way Gokuldas Exports has rallied. A couple of the other textile majors like Indo Counts, KPR Mills, whether they benefit or not, but as Gokuldas says, the opportunity is there. $1 billion is what they quantified it, and Gokuldas Exports is up close to about 12%. Many financial names in the mid-cap space are on the way up. So you've got BSC on the back of their numbers, KFin, Paytm is higher by nearly 7%, pretty large volumes. IFL Finance, add that to that list. Then you've got earnings reaction in the form of Aarti Drugs. You've got even Piramal Enterprises, for instance, that's moved up nearly 7%. CCL Products higher for the second day in a row. On the way down, you've got softness in a couple of these defense names like Bharat Dynamics is down, Mazgaon Dock Ships, Shipyard, that's also lower in trade. And Swiggy has been so choppy this week, right? One day up, one day down, today down nearly 5%.
And the next few trading sessions, a lot more of the shares will be eligible for trading. So I think that will be an overhang because that lock-in period ends on Swiggy. So we'll have to keep an eye out in terms of the supply that could come in because of the some of the shares getting freed for trade. Let's get in Mitesh Thakkar, though, to give us his technical check on the markets. Well, Mitesh, when we started off earlier today, we were looking at a screen that was down 150 points. You know, the initial 15-20 minutes itself, that dip got bought into. The Nifty is now trading with a gain of 25 points, but the broader market's looking quite good. You'll say that the market wants to test higher levels?
Good afternoon, Nigel. I think that, still looks like to be the case. But the only thing is that, we are sitting on such a big rally that I think a few days of consolidation will not hurt the market. So I still believe that while the overall trend is up, this is a market which is, essentially sideways and closing about 24,520 or an intraday hourly to hourly closing above that level, I think could trigger some upside. But trade with long buys. I have a buy on Oil India with a stop at about 399 and a target of around 425 on the upside. And the other one which I like, and it's been a stock which I recommended earlier as well, it's M&M. Just trying to get past the 3100 mark. So buy here with a stop at 3080 for targets of 3170.
M&M has gained 6.5% this week. Came out with numbers on Monday. The street loved the numbers, and the stock continues to gain upward momentum seen in M&M. That's a stock Mitesh also likes. But let's talk about pharma. The US FDA says they're planning to expand unannounced foreign inspections. Ekta's here to tell us the implications. Ekta.
Thanks for that. Well, yes, the US FDA is looking to expand unannounced foreign inspections. So what they've said is that this is going to build on foreign unannounced inspection pilot program that they had in India as well as China. The aim is to ensure foreign companies receive the same level of regulatory oversight as domestic companies in the US. US firms, for example, already face surprise checks as per them, and foreign sites often show more violations despite advance notice. Investigators now onwards will refuse industry-paid travel to ensure that there is complete objectivity in terms of these kind of inspections. To put it into perspective, the FDA conducts around 12,000 inspections in the US annually and 3,000 inspections outside of the US annually in more than 90 countries. Now, according to them, surprise checks will help catch bad actors who falsify records and conceal violations. The FDA, according to them, can act against inspection delays, denials, limitations, refusals going forward. The goal for them is safer, legitimate products for Americans, and a new phase of tougher, smarter oversight is something that they're looking at.
Okay, all right. Thanks a lot for that, Ekta. Well, let's hop across to Prakash Diwan, who joins us this afternoon. Hi, Prakash. What a day of trade, right? You know, one would have thought that, in fact, the broader markets could be under some pressure. But clearly, money was waiting at the sidelines, waiting for the event to get out of the way. Now the markets are willing to look forward. Your comment on maybe the pharma stocks that Ekta just spoke about, or any other stock that comes to mind?
Good afternoon, Nigel. So I think it's been a remarkable day. Lots that's happened in the last 12, 24 hours, whatever. And, you know, the reason why the market has responded so maturely is there was anticipation of some kinetic activity, and that was kind of built in. People were light on positions while the FIs kept buying, which is a great sign of confidence in the underlying economy and the change that we are seeing. So, very clearly, it's going to be back to business as usual for a lot of the sector. There could be certain measures from the other side which could kind of upset things once in a while. But I think the overall texture remains to be understood that the government wants economic activity to supersede everything else. And once the US Fed rate announcements are out of the way, you'll probably have very conducive global cues as well, which will favor India. I would believe some of these names that we have in the cyclical side, some of the industrials, they are the ones that will start looking up. And we've been talking about cyclicals like cement and steel and chemicals for that matter, where they're making a comeback. So it's going to be an opportunity while the rest of the world kind of gets to pause. You actually have an opportunity to buy into some of these names. Pharma extremely positive, but it's a very vast field. What the US FDA is trying to do is rationalize or make the playing ground much more level, and that's always good for Indian companies who have matured enough to understand what the US FDA expects. So from here on, you'll probably see an accelerated pace of growth for some of the good ones, but I can tell you pharma is also priced pretty well from a valuation perspective. So don't expect fireworks out there, because it's not something like what IT was 2 months back, where it kind of made a comeback, which was very sharp. So pharma is fairly value, but yes, you will keep getting opportunities. I keep telling you about a company which reported numbers, nothing very spectacular, but the build-up is so positive. And after the the UK FTA, there's going to be a lot of work that will start happening at much more competitive pricing, in some of these research-related activities. So Indegene is one company that you could look at. They have a lot of clients in Europe, and once the UK FTA kind of starts getting into action, it's not just the textile and liquor companies that will benefit, but you'll have a lot of these fintech and pharma research companies and all, which will also start benefiting.
Hi, Prakash. PNB's numbers are just out. Remember yesterday, Bank of Baroda, same time was the accident. Bank of Baroda's, stock price slipped nearly 10%. But PNB has managed to grow its NII. In the case of Bank of Baroda, the NII had declined, and that disappointed the street, along with the NIM compression. But at least in the case of PNB, the NII has grown. Profits are up significantly, a 52% jump in the company's profits year on year. There is a surge in the other income, so that also has aided the bottom line. And the asset quality, at least, the gross NPA number looks to be fairly stable. The NII growth stands at about 3.8% at 10,757. The stock is not reacting too much, down close to about 1%. The entire PSU banking index itself is on the flatter side. PNB is down nearly 1%. But the other big story, Prakash, has been the UK FTA, the free trade agreement. So it's eliminated tariffs on 99% of the Indian products entering the UK market. So it's new avenues for key sectors like textile, the liquor industry. So we had a chat with Gokuldas Exports and Radhiko Khaitan. Listen into what they had to say on how this deal can reshape their export strategy.
Bangladesh's exports to UK, it's almost 4 billion. China's exports is 5 billion. And India is about 1.5 billion or something like that. So Bangladesh is large, thanks to FTA, thanks to duty-free access, because of it being low-cost country. So that gives them a special access, tariff-free access to UK market. They have a 12% advantage over India, which now through this FTA is nullified. And on top of it, if we get a duty-free access into that country, I presume that there must be a lot more opportunity to source from India. In anticipation, several brands have been socializing, sourcing from India market. Now this will get an incremental fill-up and will, rise very quickly. So I see this as almost $1 billion opportunity for India, incremental opportunity for India.
If I talk from Radhico's perspective, we welcome the FTA move, because as a company, we are also one of the largest importers of bulk scotch. We would be the largest importer, and we'll be importing about close to 250 crores of bulk scotch in the current fiscal. And also we are exporting our malts to UK, etc., so which becomes much easier. So from Radhico's perspective, I think it's a welcome move. The final prints are still awaited. But on the whole, signing of the FTA is a good move by the government.
There's sort of two key voices coming through, Gokuldas and Radhiko, two different sectors. Prakash, the opportunity for textiles, I think, is pretty clear. Apparels, etc., is pretty clear. For alcohol beverages, it's a little more mixed. We don't know. I mean, Radico, for example, as you heard, said they import a lot of bulk scotch for blending purposes, so they get savings on that. But then you also will have, London and UK brands here at more competitive prices. So will that increase competition, lower pricing, etc.? We don't know. I mean, it's not clear in that conversation. And they also don't know. It's too early. What's your sense?
No, so I don't know if Nigel wants to pitch in, but the market that is actually likely to get completely shaken up by this is the gin market, Prashant. We have a lot of gin players in India. Gin doesn't really take too much of time to set up a unit and get the distillery up and moving. You could start, a greenfield plant just within a short span of 6 months. Now, what has happened is the market has started evolving very rapidly with so much of new introductions. UK is, the mecca of gin. In fact, most of the raw material comes from there, the juniper and also. If the final produce from UK becomes more affordable, that's the market which will probably grow and impact local players as well. Diageo, for instance, has a huge portfolio of products which we don't have in India, which they don't sell in India because of this prohibitively high duty. If that goes away, you'll probably see that. So it may benefit a specific company because of its product strength, or it may kind of, not benefit some of the other ones which compete against the UK imports or potential imports. So it's going to be a mixed bag. But I can tell you, it only helps expand the choices that Indian consumers have. And from that perspective, United Spirits will continue to benefit. And that's why you see, there is a little bit of this neutral reaction of sorts. While it may lose some market share to imported whiskies, it also has a huge portfolio that benefits from it. And remember, at some point, they will start making India as the base to outsource to the rest of the world. So, that's going to be a big change. So we'll have to see how people utilize this FTA in their favor. But there's lots interesting that can happen. It's just that it's just UK market that we are talking about. It's not the entire EU, which would have been a very different scale and scope.
What about textiles?
Oh yes, Rima. Textiles is probably the most obvious beneficiary, particularly apparel and home linen and all of that. So if you're talking about Gopal's expert, I think they've been on the point in terms of pointing out what's advantages. But there are lots of companies which could benefit. There's a small company called Pearl Global, not very big in terms of size, but equally promising, available at probably 19 times P. I don't know, to be very honest, how it is placed today, but I'm sure Pearl Global is like a peer group of Gokaldar Exports, has the base in India, exports to the rest of the world. And some of these companies will start taking advantage of this FTA to get market share. Now, once you get market share, once you get some sort of a footprint built up, it's extremely difficult for others to dislodge. So those are things that will happen. A PDS or a Pearl Global, those are things that I would definitely believe would look. But it's very positive for textiles for sure.
Okay, all right, Prakash, thanks a lot for joining in, giving us those inputs. And by the way, on the point you were making with regard to the alcohol beverage companies, I was just looking at a report earlier today that stated that actually tequila seems to be grabbing some market share on a very, very low base. So those gin drinkers are moving to tequila, but the sweet taste of whiskey does continue. I think volumes are as strong even in the past year. Thanks a lot, Prakash. We've got a few days to go before the weekend, so cheers to that in a few days from now. For the time being, we'll slip into a short break. You come back, we'll continue our market chat. We'll have the Alpha Manager of the Day, Jitendra Sriram of Baroda PNB Paribas, will be joining in. Stay with us.
Welcome back. The Nifty is at that 24,400 mark. Some of the stocks which deserve mention, one of them is Paytm. Stock is up nearly 7%. They reported a loss of 540 crore, but most of it was on account of a one-time ESOP expense. That was 522. So if you strip that out, the company is nearly profitable at the bottom line. So that's something the street likes. And secondly, even in the conference call, they spoke about how regulations are moving on the MDR front, the merchant discount rate, which is currently nil on UPI, but on other forms of payment like credit card, you are paying an MDR of 2%, 2.5%. But if it comes through on UPI, it will be a big catalyst, and the company even said that it could benefit them by 7 to 8 basis points. So Paytm has been a big mover. The other one is BSC, and the stock, I think, went on to hit a fresh 52-week high today. BSC share price, it's still up close to about 6.5%. It's come off from the day's high, but today it went to hit 6,847, new high on BSC. Again, the company's numbers are very strong. 10% jump in revenues quarter on quarter, year on year 75%. They're gaining market share in the options category, and the street likes the performance. KEI is another big mover. We're awaiting numbers from Dabur. Dabur remembers pre-quarter update in Q4 was very disappointing. The stock had fallen, and now we're awaiting the performance for Q4. The pre-quarter was a bit of a miss. But Voltas is the other one which will be reporting Q4 numbers. Upasana joins in with the street expectations.
Well, we are expecting a stable quarter this time around with a revenue around 4,900 crore with a growth of 17%. EBITDA somewhere around 354 crore with a growth of 85%. And EBITDA margin, we are expecting an uptick from 4.5% to 7.2%. PAT also, we are seeing a 1.1 time uptick, that is 247 crores. Now, the company has reported significant losses in Q4 FY24 in its EPC business, due to which the numbers appear to be optically high in terms of growth when it comes to EBITDA and PAT, but it's mainly due to a low base. Now, for RAC, we are expecting a growth of nearly about 24%, and the revenue growth overall of the company, that is around 17%, that will be mainly driven by the company's UCP segment, for which we are estimating a growth of 20%, which will be led by multiple factors, categories such as RAC 24%, commercial air conditioner 13%, and 5% by commercial refrigeration, according to Kotak Securities. Now, RAC revenue growth is expected to underperform the industry growth on account of high base and loss of market share this quarter. So now let us look at the key things that we'll be closely watching out for. We'll be watching out for the market margin and the demand outlook, company's commentary on the market share and the way forward, and lastly on the new order wins in project business. So overall expecting a stable quarter from Voltas.
Okay, this is a number which we are expecting, but KEI reported numbers. We had the management with us as well. The stock, I think the last I checked, was up some 4-5%. Upasana, quickly wrap up the numbers for us.
Well, KEI reported a good set of numbers. Revenue growth was higher, much stronger than the street estimates. The company has reported a strong cable and wire growth of 34%, which has outperformed its peers, and also the street estimates of 18%. Now, growth was mainly driven by company's domestic demand in infra and real estate uptake, and also copper prices. For FY24, the revenue growth stood at 20% on a one-year basis, which was higher than the company's guidance of 17 to 18% in FY25. Going forward, company is guiding 19 to 20% growth in FY26 and 20+% growth in FY27. Now, coming to numbers, revenue saw an uptick of 33%, which was mainly led by company's key segment, cables and wire, as stated earlier, with a 34% uptick. Cables and wire growth was mainly driven by low tension, high tension cable and even house wires. Now, company's stainless steel revenue was down 19%, and EPC project also saw a revenue downtick of about 34%. Overall, EBITDA margins saw a downtick of 60 basis points at 10.3%. PAT saw an uptick of 35%. Now, let me highlight some of the important on-call highlights. Company has said that the remaining QIP fund of 1,300 crore will be invested to complete the Sanand project, and low tension and high tension cable will be commissioned in Q1 FY26, and the EHV capacity will be commissioned by FY26 to 27 in Sanand. Exports will also see a substantial jump as Sanand project will come on stream FY26 onwards. So all in all, strong set of numbers and strong commentary.
All right. Thank you very much, Upasana, for that. So that's a pretty exhaustive list, setup as far as KEI is concerned. Jitendra Sriram is with us, Senior Fund Manager at Baroda BNP Paribas Mutual Fund. Jitendra, good to have you with us here. What's your view on the India-Pakistan situation? And just kind of bring in all the conversations you would have had with other participants of the market. So I'm really looking for a amalgamation of views.
Thanks very much. Thanks very much, Prashant, for having me on the show. So I think the main thing which struck me was the messaging. There was no major rhetoric around it and all that. And I think Indian government was also very clear that they have not taken any steps against economic, military or civilian sites. So it seems to be something that nobody wants to escalate. So my take is that at this point of time, I don't see any kind of increased activity because of the fallout. See, you can't not let such an event like Pahalgam go unpunished to an extent that has been reacted to. So until and unless there is a very sharp reaction to it, I don't think Indian government will want to escalate this any further.
Okay. No, absolutely. And I think that's something we'll have to keep a close eye on, but good to get that view. PNB just reported numbers, Jitendra, so allow me to just go across and bring in our colleague Abhishek Kothari, who's standing by, with just a quick snapshot view. Okay, I think we will have Abhishek with us in just a bit from now. Let's just look at the stock for a quick bit and see. I think the stock was trading at, it's come off a little bit, but it did spike up after the results came through. So numbers, I think, quite different from what BOB is reported yesterday. We'll have more on this one with Abhishek as we go along. All right, Jitendra, just to sort of come back to you. So what is your sense? I mean, is the market primed to do more on the upside if this does not escalate? Because a lot of the local crowd has been out of the market, staying on the sidelines, watching the situation, even as institutions have continued to pour in money.
My take is, I think this event obviously was a kind of was causing some nervousness in the market. So my take is, I think with whatever has happened, and it seems to be a very measured response. It is not something that, you have tried to escalate something out of hand or something like that. So to an extent, I don't see that being a big concern for markets here on. I think markets are going to be probably more governed at this juncture. One, with the kind of earnings season that we are having. And second is that as the 90-day D-Day of Trump tariffs come through, probably by around June or July, you will want to know what contours you are able to carve out. So yesterday you had obviously the UK trade deal coming in. And if something on those lines can be established on a bilateral basis with the US, I think that is something what the market will await for clarity for going forward.
So I request you to stay with us for the time being. Abhishek is joining in to run us through his quick analysis of PNB. The stock, by the way, has come off the high point of the day because the slippages and write-offs actually have appeared to perk up. But Abhishek, you take it away.
Well, Nigel, if you take a look, amongst the results that are flowing in with respect to large caps, on the private banks and PSU banks are losing their sheen despite low CD ratio that they had earlier. They are not able to command on the yield side, and NII is missing for most of them. So take a look over here. NII growth is just 3.8% YOY, which is the weakest in last 13 quarters. They have seen a decline of 2.5% sequentially, which is the worst in last 12 quarters. So clearly they are losing out on net interest margin because of lower loan growth than the private counterparts. Robust other income, which is seen in all the other financial entities as well, up about 38.2% sequentially. Asset quality is one of the best in last 10 years or even more. Gross NPA ratio is down to 3.95 versus 4.09%. Net NPA ratio is down to 0.4% versus 0.41% in the previous quarter. However, the credit cost has increased a bit on a sequential basis. So NPA provisions are up 85% 3% quarter-on-quarter, which suggests that you, as seen in the slippages have also increased on a sequential basis. The deposit growth is at 14.4% YOY and about 2.4% sequentially. Sequential deposit growth is at 5-quarter low. Advances growth is at 15.3% YOY and 0.7% sequentially. The 0.7% quarter-on-quarter, that's the weakest growth that you are seeing in last 15 quarters. And cost-to-income ratio for them is at 28-quarter high of 56.2% versus 54.2% in the previous quarter. So clearly, weak business momentum as well as weak P&L for PNB. Back to you.
And they've given the FY26 guidance. They're saying operating profit growth seen at 8 to 10% in FY26 versus 10 to 12% earlier. So they've lowered the operating profit guidance. PNB stock down about 1.5%. By the way, the reversal in many of these defense stocks is quite stark. Pull up the intraday chart of BDL. It started trade in the green. Mazgaon Dock Shipyards was up nearly 2% and open, and now these stocks are down nearly 5%. That intraday chart will show you. In the morning, there was some optimism after those precise strikes were carried out. The investor sentiment was high in these stocks, but now there is some rotation out of these defense names. Jitendra, do you own in your portfolio any of these defense stocks?
Yeah, we have a limited exposure to defense names as such. And I think it goes back to what I was saying. I think to an extent, it is probably that the market is starting to believe that there may be not much escalation here on. Because the response was extremely measured, extremely targeted. So I would say that, the kind of euphoria that you were earlier seeing in the last 10 days or so in defense names, I think that is coming off a little bit.
Hi, Jitendra. Good to see you, Ben. Give us your view on a couple of these other names then. We have this UK-India FTA that's been seen the light of day finally after quite a long while. And there are a couple of sectors that could be potential beneficiaries. The textile space, we spoke to Gokul Das earlier today, and they clearly said there's an opportunity for India to maybe double their exports from the current $1 billion thereabouts. The stocks clearly are on fire. What's your take? Big opportunity for this space?
I would say textiles definitely has an opportunity because there are a lot of large UK retailers who do source material from India. So to an extent, obviously that is an area we could tap into. And if we have a little bit of a duty advantage, that would help. But I think the bigger story is obviously on the Scotch side or on the spirits side, where I think you have a straight benefit of in terms of, getting cheaper base liquor out into the Indian markets and then being able to upgrade your product slate as such.
Jitendra, for the index, we started this year with knowing there's a lot of headwinds. There could be a bit of a flattish year, consolidation. In fact, we pulled back close to 10%. But then now we're still up close to around 3% for the first 4.5 months of this calendar year. From here on, would it be adventurous to think that maybe we end the year with a 10% gain? Or do you think the markets will spend some time here and at least the recent lows will get protected?
So I think you captured it perfectly in a sense. I think the lows probably we have gone past that part of it. Reason I think the biggest swing factor that came from where we began the year was the shift and stance from the RBI. So both in terms of, the rate actions they did, the change in stance and infusing a large amount of liquidity into markets, I think all that has aided sentiment on markets quite a lot. So to that extent, I would say that, where we were 3 months back and where we are now, there's definitely a big improvement in terms of the sentiment. Also, our numbers, the economy numbers itself, if you look at all the quick indicators that come in, like, your GST receipts, net GST, your FASTag collections, and all these are showing some buoyancy. So it may not indicate like a very high growth, but at least it is showing an improvement from last year. So to that extent, also there is a small plus. And also, if you see, the weaker dollar is aiding some return of FII flows also from the flow perspective. So from that matter, I would say probably that the base for the market has definitely gone up from where it was. If you come to the specific part about where from here on, I think, yes, you have seen a near-term rally, which has been quite strong. So you may spend some time consolidating near-term. And maybe after you get the full cues on the results and some more color on the monsoons, market might look to make its next move then.
Okay, all right, Jitendra, we'll leave it there. Thank you very much for joining us with that perspective. Appreciate your time here on CNBC-TV18. Polycab has come off sharply, as the stock at the bottom of the screen indicates. I think it's now down in the red from the highs of the day. The big turn, of course, as we've been highlighting, has been Radico, which has sort of moved quite a bit from the day's highest point. What we'll do is we'll take a quick commercial break here. We come back with some technical trading ideas on the other side, and of course, more opinion that we got through the course of the day.
Welcome back. Markets holding with good gains. We're up 40 points. The bulls will feel this is a very, very good trading session. And the mid-cap index, that's bursting away. It's up closer to 1.5%. The Nifty banks continues to defend the lower level of around 54,000 odd. Mitesh is back with us. Mitesh, what do? Take the money off the table or ride it now for further upsides? And also, where would you place your stop loss at if you're taking a long position? A couple of picks as well as always, 3 p.m.
Nigel, I think taking a long on the Nifty is not something which I'm very keen on, but the Bank Nifty has a setup, which could be slightly positive. And therefore, taking a very tight stop loss at about 54,490 or 485, which is roughly about 80 points lower, which is nothing on the Bank Nifty. I think a long trade can be tried for a target of around 54,800 to 54,850. And on the stock side, BTST on Paytm with the stop at about 864 for targets of 890. And Pyramid Enterprise is something which has come on the radar as well. Very strong pricing volume action here. They take a BTST with a stop at about 1,022 for targets of 1,050.
It's a cash stock, Mitesh, but CCL Products, what a move. I think day before yesterday, it closed at under 600, 750 today. Any thoughts here?
Prashant,
CCL, yeah.
Something has definitely happened over here. The big gap of today and yesterday and then today, a good follow through. Last time the stock rallied, it had a highest ever weekly closing at about 800. So that's the first pivot. But I think eventually we are looking at a 840, 850 kind of a zone. Beyond which then, we look at four figures as well. So the setup is very, very positive for me. If somebody is holding this, hold it out. Or if you get a decline and a fresh entry around 720, 710 mark, that's the area to enter.
What about Gokuldas, Mitesh? High was about 1260, fell one way, all the way to about 750 or so. There's news here now. I think the news will be nothing immediate, but that tailwind is there, the FTA news flow. But technically, how's this one?
Gokuldas export something I'm not tracking very closely, Prashant. So I'll take a void over here.
Okay. Got that. IIFL Finance, again, a completely bombed out, beaten down name. It's 360, 370 or so today.
Yeah, so actually, IIFL is also coming to the futures and options segment. So there's something which has come on my regular track list as well. Last time we got a closing of 366, which was on the 25th of April, and then intra-week high of 374, and then we kind of tapered off from there. But to me, the charts have improved a lot. I think once it clears this levels of 365, 375 zone, then minimum is 400, and possibly we are even looking at a test of around 450.
Okay, all right, Mitesh, we'll let you go on that note. Thank you very much for joining us with your call on your trades and, of course, call on a bunch of names as well. Now, the big story has been the strikes which India has carried out, destroying terrorist infrastructure in POK. And of course, in Pakistan as well. Let's actually wrap up the day's developments, what's happening, and of course, the state of affairs, the state of play as things stand right now. Parishit is here with details. Parishit, over to you.
Well, it was around midnight that the Indian forces carried out a targeted retaliatory operation against 9 terror camps in Pakistan. Now, these were terror camps along the border and some even 100 kilometers away from the border. These were terror camps of the Lashkar-e-Toiba, the Jaish-e-Mohammed, the Hizbul Mujahideen, which have traditionally carried out attacks on Indian people, Indian forces and civilians as well. we used artillery guns, drones, and fighter jets to carry out those strikes. Now, these were very precision and very precise strikes on terror camps, and these had nothing to do with civilians, any economic or vital installations in Pakistan, or even the Pakistani army for that matter. And that's the word coming in from the Indian government, that our strikes were non-escalatory in nature. This is because we had been challenged, and Indian civilians had been killed in a very ghastly manner by asking about their identities, their faith, and India was left with no choice but to punish Pakistani terrorists in this manner. Having said that, even though we may have exercised restraint in our response and in our targets, the escalation from Pakistan cannot be ruled out. We've seen very heavy shelling by Pakistan ever since that operation took place. It was a 25-minute operation that took place around 1 a.m. last night, and since then, Pakistan has been targeting posts across the LOC continuously. The firing has not stopped. The military operation, so to say, is still on. We're likely to get more updates in the next few days. Pakistan has said that they will now respond to India at a time and place of their choosing. So we will have to see what kind of response Pakistan comes up with and what happens. So India may have targeted Pakistan in a very calibrated way, but the response is not in our control. If tomorrow things escalate, we have to be prepared for that. And that's why we're seeing these wartime mock drills happen all across the country. In fact, the civil defense officials telling us that they currently have 6 lakh volunteers. They're getting an overwhelming response, and they would like at least 18 lakh people to be a part of the civil defense forces all across the country. So we remain on high alert. The airports along the western border remain shut. The civil defense mock drills will continue. And frankly, this operation is not over. Pakistan will also respond, and we will remain on high alert over the next few days.
Indeed, the immediate reaction has been fairly, measured and stable. But investors and civilians continue to remain highly vigilant. In fact, schools in Mumbai, where kids were let off early to ensure that before 4 o'clock, they're at home when the mock drills begin. But in the aftermath of Operation Sindoor, we also spoke to a whole host of market experts. Here's what they had to say about the strike and the possible impact on the markets.
We all expect it to be a measured and a calibrated strike. And over the last decade, we had 2 instances in a smaller manner like this. One was the Uri, and the other was the Pulwama, and market took it its own stride. But the larger one was in 1999, if you remember, May to July. Market saw a 10% drawdown, but eventually we outperformed MSCI. The MSCI India outperformed by 30%.
Clearly, the geopolitical risk is behind us. The uncertainty has probably come to an end, though there still continue to be a few developments going forward, as there will be retaliation as well, or there could be retaliation as well. But clearly, from a market standpoint of view, the uncertainty is behind us.
So, as a patriotic Indian, undoubtedly, Pakistan deserved a harsh response. And at least this is a beginning. From a market point of view, clearly the global support is with India.
All right, let's focus on the 2 biggest stock exchanges then. NSE, which is unlisted, and BSE came out with its 4th quarter results yesterday. Pamakshi joins us to tell us how both the companies have fared in the last quarter of FY25, and she'll also wind it up with a valuation comparison. Pama, take it away.
Well, Nigel, BSE came out with a very strong set of numbers. NSE, on the flip side, had a rather weak, quarter that was the 4th quarter for BSE. Let's first look at how the numbers fared. Revenue saw an uptick of almost 10%. It's 10% higher as compared to what the analysts were also expecting. Largely, the revenue growth is being driven by transaction charges, which saw an uptick of almost 20%, as well as the other operating income, which is up nearly 12%. Treasury income and services to corporates, however, saw a dip this time around. When we look at the EBITDA margin, they have improved by around 58 basis points sequentially to 57.2%, slightly lower than what the street was penciling in, but the net profit has come in much higher as compared to street expectations, and that is because there was an SGF reversal of 109 odd crores as compared to a SGF contribution of 199 crores in the previous quarter. Resultantly, net profit is higher by almost 126%. Operational metrics, let's have a look at that as well. Average daily notional turnover saw a downtick of almost 35%, but on the flip side, the average daily premium turnover was up nearly 35%. The EPS for BSE is at 96.55 per share, and therefore the valuation for BSE is at around 65 times, much higher as compared to NSE, which is somewhere around the 30, above the 30 times mark for NSE. BSE has been seeing some market share gains as well. So, strong set of numbers from BSE. NSE, not a great set this time around.
All right, Vamakshi, thank you very much for that. That's a comparison. I mean, let's just put the valuation table, the last one, back up on air. 65 times compared to, I mean, I guess a much more reasonable NSE, just at about 32 odd times earnings or so. So that is, some numbers which are coming through with regards to valuation comparison at this point in time.
I guess a couple of factors, right? Because of the valuation difference. One is because BSE is listed, NSE is unlisted. And the second factor is because BSE in index options, they have been continuing to gain market share. Last check, it was at around 20% approximately. And now they're talking about making some kind of penetration to the cash market. But otherwise, NSE, in the cash market, they are the leaders out there. They have been holding on to their market share as well. And the larger player, in fact, trading at a discount, I think it's only because it's unlisted as of now.
Absolutely, and I think that is, absolutely the case. And we'll continue to sort of dive in. And BSE, of course, is a big gainer today, but we'll have to look at the overall perspective because there is a larger player is unlisted, which perhaps many are expecting to get listed sooner rather than later. Paytm is the next one. Stocks up 7% following fourth quarter earnings. Let's wrap out the numbers with Abhishek, who's with us. Abhishek.
To begin with, revenue came in at 1,911 crore, down about 15.7% YOY, but up 4.5% sequentially. The net loss was at 545 crore. This has a one-time impact of about 522 crore. So the net loss is way lower than Motilal Oswal estimate of 110 crore. If you remove this one-off, contribution profit, that's up about 11.7% sequentially. The GMV is up about 8.5% YOY and 1.2% sequentially. Total transactions, that's up 16.65% YOY and about 6.9% sequentially. The management in the con call did mention that the EBITDA before ESOP, they will break even in Q1 FY26, and that's what got the interest with respect to investors in street today. Back to you.
Thank you very much for that. Mayuresh Joshi, Head of Equity Research at William O'Neill, is now with us on the show. Mayuresh, come in on Paytm first, and then we'll get chatting about the other stocks.
Afternoon, Rima. No, I think numbers are a tad bit better than what the street was probably expecting. But let's again look at how the competition is mapping out, right? I think there are a lot more competitors at this juncture as far as banking correspondent services are concerned. There are a lot more correspondents as small merchant banking is concerned as well. And therefore, I think competition is brewing in this space as we speak. Obviously, I think the innovations that a lot of competitors getting on in terms of their digitalization efforts, in terms of the friendliness that the platform has to offer in terms of services. And because of digitalization, a large part of the cost probably gets embedded in terms of better margin performance. But again, I think the expectation of the street and what they probably delivered a tad bit better. But my own sense is that we will wait it and watch it out for the next couple of quarters results as well to see how Paytm is doing, how competitors are probably doing, and whether there is some element of saliency and consistency in terms of numbers that are probably getting the problem.
Okay, all right. Well, we have the APL Apollo Tubes numbers that are flashing for you at the bottom of your screen, and the numbers look quite good. Part of the street actually was anticipating good numbers because we already had the volumes with us earlier. Mayuresh, what's your call on APL Apollo? The stock had got very, very expensive. And if I'm not mistaken, in the last 20 months or so, the stock has not done anything. It's not gone beyond those highs that we saw in 2023 itself. Now the numbers seem to be coming on, on expected lines because of their product mix, because of the cost efficiencies as well. And it's the leader in the pack. You saw stocks like High-Tech Pipes, they went ahead, they raised some money, JTL as well. But it appears the leader is now taking over. The leader is gaining market share and will get that valuation premium. Your take at around 1,650 rupees?
I think it's looking good. And I think afternoon to you, Nigel. And if the numbers are a testimony, if numbers have no one-offs, the operating performance, if it is better as it seems prima facie, I think it should start bouncing back very, very smartly. Again, I think as you rightly put out, market leadership in category that it operates out of, the backward integration that they've probably deployed over the past few quarters in the right areas as well. And because of all these factors put in place, the expectations in terms of what capex is expected to happen, specifically on the government side, over the next few quarters, the expectations of some element of private capex expected to come back very, very strongly. And in fact, in the release, I'm just reading that out as well. I think they are expecting their existing capacity to probably get added by 2.3 million odd tons over the next 2 to 3 years. 1,500 crores capex is lined out, which is largely going to be internal accruals and a mix of debt. So in that sense itself, I think they are seeing and sensing all these macro tailwinds probably to play out very, very effectively. They have got the backward integration, which means margins should probably support them. With the expanded capacity, as their belief is that demand should come back very, very strongly and sustain and remain at an elevated level. I think it should probably start sustaining and gaining its market share over the next few quarters as well. So yeah, I think rating rankings look super for APL Apollo. We remain optimistic on this.
All right, Mayuresh, stay with us. What we're going to do is take a quick commercial break here. There is 12 minutes to go for close. We're back on the other side.
Welcome back. Tata Motors is your top Nifty gainer. Looks like it will end with a gain of 4.5%. Two sets of news that the stock could be reacting to. One is it could be a beneficiary of the UK FTA agreement. The tariffs on automobiles imported from UK will fall from 100% to 10%. So that's a positive for JLR cars coming into India. The question is how big a market will India be given the price point? And the second one, the one which investors are really cheering, is the demerger of the CV business. So shareholders have unanimously given their nod for the demerger of the CV business. Mayuresh, your thoughts on these two sets of news flow for Tata Motors?
I think that's exactly what's playing out, Rima, onto the stock itself. But the first point that you pointed out, I think, what is the expectations in terms of volumes from the Indian market with the FTA that is expected to get signed? I think the next few months, I think, will be a testimony to that fact. And even at this juncture, I think there are imports that are happening for the Range Rover and the JLR models in India as we speak. Obviously, with the duty cuts expected to take place, that will have an implied effect on volumes. But a large part of their volume share comes through from North America and China. And you're obviously seeing some elements of tariff conundrums as far as the North American market is concerned. And what BYD and the other players are doing in the Chinese market, specifically when it comes to parts, designing content per car, is simply fabulous, the videos that we probably see. So I think competition is intense for key markets for JLR. And therefore, how volumes play out for these key markets are going to be extremely critical. Also, I think a few reports that I was reading through that generally, I think the global EV market is going through some periodicity of softness. And the expectation is that the softness might very well continue into FY25, which means the accelerated R&D expenses and investments that have probably been done, not just by JLR, by its competitors as well. I think it might take some time to recoup all these investments onto the balance sheet. So I think positive news based on what we've seen so far. But generally, I think the re-rating will happen in terms of how the key markets for Tata Motors will be.
Textile companies, Mayuresh, do you like anything here?
Afternoon, Prashant. No, I think they have been underperforming, but I think two aspects here again. The expectation in terms of China plus one expected to grow strongly. I think that is a theme resonating with the entire sector as a whole. Obviously, I think stocks like a KPR Mill, Vardhaman Textiles are backward integrated too. So to that extent, they have full control right from yarn to fabric, and that gives them superior EBITDA margins. So KPR's margin anywhere between 20 to 21%. Similarly, in the case of Vardhaman Textiles as well. The other players like a Gokuldas, which have a significant say in the UK market, the expectation here largely is that if you probably dissect how the textile market is, China is one of the biggest exporters to the UK and the EU market, followed by Bangladesh, Turkey, and then India. So I think India needs to probably ramp up its game when it comes to UK and EU. US, we are reasonably placed as far as cotton bed sheets, cotton bedspreads are concerned, bed linen is concerned as well. And therefore, I think players will benefit, in my opinion, going forward as well. And therefore, integrated players, players like a KPR Mill as an example, Vardhaman Textiles as an example, would not just see domestic opportunities, but export opportunities. And because of their sheer backward integrated operations, margins will be far superior and a better control over working capital cycle, which will give ROE efficiencies on the.
All right, Mayuresh, what's the view on Navin Fluorine? I'm looking at the exchange, and midnight we had an announcement that came in that they have announced a strategic agreement with Chemours company to manufacture and establish initial capacity, at their facility in Surat. So that seems to be a piece of news flow that came in overnight. The stock is sitting with a gain of around 1%. Your view on Navin Fluorine?
So remains positive, Nigel. I think the existing lines of businesses are expected to continue on a stable footing. Having said that, I think the kind of pain in terms of reported numbers over the last few quarters should largely be behind us. And the expectation largely, again, whether it comes to refrigerant gases or otherwise, should show signs of improvement as well. Again, I think the new gases that are expected to get used and deployed, I think Navin obviously is having a front-running aspect in that, both in terms of capacities and more capacity expected to get added. So I think all business segments should perform in a stable fashion. So anybody holding on to the stock should continue.
Radico, we've not spoken about. Any thoughts here? Are down 4% now.
No, I think the UK trade agreement and the expectation that whiskies will probably come into India at a lower cost is creating the dent onto the stock. But I think fabulous set of numbers, in my opinion. As a disclaimer, Prashant, I think we continue holding these stocks both in our domestic and global portfolios. Our own sense is that the entire premiumization for the sector as a whole, including Radico. So Radico has a 45% volume share in premium products, a 69% share in terms of the sales value of these premium products. They are expected to grow at a decent pace. In fact, realization per case for their premium products has crossed 1,800 odd rupees. And some of their products are world-class as we speak, very well recognized globally, have won global awards, whether it's Rampur or whether it's Sangam Single Malt. And therefore, I think my own expectation is that even if the FTA announcement is done, even if more whiskies probably come through from the UK, they have created their stand, they've created the quality benchmarks, and volume and numbers should continue growing at a decent pace domestically and from an export-oriented perspective as well. Again, from an input cost perspective, whether it's ENA, molasses, glass prices, look extremely stable. So my own sense is that the earnings momentum should continue. We remain positive and optimistic.
Okay, all right. Mayuresh, stay on. I'm just going to come back after just wrapping up things as far as market closing is concerned. Just a minute and a half to go for that. So, it's actually a pretty decent session, 40 points higher. We started with a 50-point drop, then the market recovered, went up 50, then didn't do very much. Basically, on the index, there wasn't very much. But the broader market, the Nifty, the mid and small cap indices up between 1.5% and 2% each. So a lot of activity as far as single stocks in the broader markets are concerned. And we'll just talk about those broader market names in a bit. But large cap, Tata Motors was the 5% top gainer. But there were other gainers as well, Bajaj Finance, Shriram Finance, there was Eternal, Geo Financial Services also participating. On the downside, you had Asian Paints, Sun and Reliance Industries, which were down a little bit. Nigel.
Well, let's focus on a few stocks then that did bounce back today. We had solid numbers coming in from APL Apollo. I was looking at the EBITDA per ton. It's coming at the highest we've seen in the last 8 quarters. So the leader getting its mojo back. The street likes it. That stock went home with good gains in trade today. What else did well? Well, you had Paytm bursting away in trade. BSC spiking away in today's trading session. Jyoti Structures, that stock has been all over the place. Now they have a big order book. That one was up close to 5.5%, pointing it out because it has very large volumes. DCX Systems, one of those defense plays that saw a sharp correction from, I think, around 350 rupees. It went down to around 220 rupees. Trade ended high with a gain of close to around 4.5%. One of the stocks that absolutely got hit but bounced back. We had Stovecraft as well, that was up 4.5% in trade today. and Sonata Software as well did pretty well in today's trading session. On the flip side, Vishal Mega Mart that had a very good run, came in for some profit taking, and Swiggy not swinging it away today. Well, that a larger number of trades will come in for a trade because of the lock-in period expiring. So we'll have to see whether or not supply does hit out there. But otherwise, you'll have to say it was a good trading session. Nifty goes home with around 30 points. The Nifty Bank up 350 points. The mid-cap index close to around 2 stocks advancing for 1 stock that's declining. The bulls fought back today. Well, we'll wrap up on this edition of Closing Bell. Don't go anywhere though. Markets Forward comes up next.